Angelo, is this a blip or is this the long-term thing?
Yeah, listen, I think this is really kind of meta. It seems like 3 months ago, just kind of really setting the bar extremely low here. And, they were able to kind of come through with flying colors in many respects. I mean, despite the fact that you kind of had the Russia-Ukraine war ongoing, softness out in Europe, this was a company that essentially grew 6% on the daily active user side of things year over year. Overall, pretty good numbers, I'd say. On that front, growing it across every region outside of Europe, and you kind of have to give them a pass out in Europe. So I think, I don't necessarily think this is a blip. I think this is a company that's now going to continue to see growth on the DAU side, but it'll probably be kind of very modest in nature. So whether or not we continue to see 6%, who knows? Maybe it'll be closer to low single-digit growth. But nonetheless, I think it alleviates the big fear out there, which was the fact that we could have seen potentially negative DAU type numbers in the coming quarters.
Now, Mark Zuckerberg in the earnings release saying we made progress this quarter across a number of key company priorities, and we remain confident in the long-term opportunities and growth that our product roadmap will unlock. Another significant point here is that they reduced their expenses forecast. A lot of analysts and investors have been pretty skeptical about the amount of money that Facebook and Meta are pouring into their virtual reality dreams. How big a deal is this?
So they essentially left the CapEx number unchanged, right? But in terms to your point, the OpEx number definitely cut a bit here. I think that's definitely a positive sign. One of our biggest fears was the fact that they were just spending way too much on that initiative. It was essentially going to squeeze the margins for the foreseeable future because of the slowing growth on the ad side of things. So listen, ultimately, I think it's a good thing that they're tempering some of those expense growth numbers. Nonetheless, it's going to continue to weigh. They are spending significantly. They will need to continue to spend significantly. I also think it's important to note here, I mean, listen, they continue to have a problem in the sense that they're catering, in our view, to essentially the wrong ecosystem, in the sense that they have to get younger and they have to get younger quick. And that's the whole point of the whole metaverse, right? And as a result, you need to spend aggressively on that side of things. They've got an opportunity here because it looks like companies like Apple and Sony are kind of pushing out some of their initiatives in the metaverse into 2023. So I wouldn't necessarily take the foot fully off the gas here if I'm them, but nonetheless, they are spending aggressively, and I think that is the right move still.
I wonder why investors are focusing so much on the good news here and not the bad. Revenue did miss estimates. Their guidance on revenue is also a little light, and this in the context of not great ad numbers from Snap, from YouTube. What are we going to be seeing here over the longer term?
I think it's all expectations, to be honest with you. I mean, this is a company that was trading less than 13 times our 2023 estimate. So the bar, was set extremely low. We're talking a depressed valuation, essentially trading at a valuation where, many people have left the company for dead. So the reason I think you've kind of seen this change of sentiment here after hours is because it looks like, at least for the time being, that type of scenario has been left off the table, despite the fact that the revenue guidance for Q2 specifically is below where the street had expected. I think there was just a lot more hate kind of going on going into this quarter.